Yeah, the way I kind of see it is that given these kind of concerns that we think are going to surface and continue to build, either the stock's at $100 and then you load up for what is a fundamentally solid business over the longer term, or you wait to get closer to the April results, because after April they'll probably raise their capital return, we'll start talking about the iPhone 7 cycle into the back half of next year, and they could launch new products as well.
We've had very bullish analysts come on here and suggest that Apple's best days could be behind it. Do you share that thought?
I think fundamentally this is a business that has $225 billion of sales per annum. It's had a massive success story with the iPhone business. We're now in a maturer phase of growth. However, what I would say is what is misunderstood and mispriced in the valuation of the stock long term, whilst this is priced like a hardware business, it ultimately has a very solid annuity type following and very high retention rates with its customers. And over time the stock will work, but certainly we're not going to see the growth that we saw in Apple in recent years.
So today we saw a little over 3 times the average daily put volume in SMH, the Semiconductor Holders Index, and where that resulted from was a December 54.50 put spread. Somebody bought 10,000 of those. They paid $1. Now, this is a bet that we could retrace these lows that we put in right here in just 39 days, down about 10% from where we are right now.
Important right now, it's basically at our target price, so I wouldn't necessarily call it a buying opportunity. We're neutral on the stock. I think more importantly, when you take a step back, you have to think about 2 things with interest rates. One is the initial hit for builders. Every time you have a 50 basis point move in the 30-year, builders sell off by like 5 to 7% since like 1980. And the reason they do that is less pricing power, less gross margin.
But now they're selling off before there's even a move.
It's an anticipation. In addition, the real reason for the sell-off started on September 9th with Meritage pre-announcing they're cutting their earnings expectations. So it's really a wall of worry. There's a lot of long-onlys buying these things blindly in terms of the builders because rates lower for longer. They're cheap relative to consumer, at least in their minds. And then all of a sudden they have to deal with these issues, supply constraints, if you will, that they didn't expect.
So if the Fed raises rates and it becomes reality, you think there'll be an additional sell-off?
Most likely.